Hello to anyone listening to these ramblings that are mostly for my own benefit, in lieu of a trading diary. How's my trading going? Well, not good if I'm honest. I've had to... Well, every month I sort of load my accounts up with a part of my paycheck. I try and trade. Invariably, it goes up, it goes down, it goes up, it goes down, it goes down, it goes down a bit more. And I go, oh god, I've got bills to pay. And it's usually like 50 or 60% of my account. And I end up transferring it back over to pay for bills and just make sure I don't go overdrawn and things like that. So this sort of is a repeating pattern. It's a repeating pattern. In spite of the fact that, you know, my floating P&L sometimes goes up pretty good. It's still the psychology where I'm lacking, and the discipline, because, you know, making these videos, paper trading, calling things purely for myself, or my weekend analysis or whatever, it all goes swimmingly and it all looks really good. And it's just something about trading with actual money. It's so frustrating. It's so frustrating. Because I see calls I make at the analysis stage, at the charting stage, play out. And it's the fucking up is coming from the execution side. It's the FOMO, and it's the impatience. I think it's because I'm getting older. And I'm 35. And I've only had money really to even try trading for the last couple of years. And it's been a bit of a roller coaster, and I think there's a swinging for the home run, trying to get a 6. I think, if we're going to go for the cricket terminology. So even though I end up being right, I'm not getting to where I need to be, and that's frustrating. That's frustrating. It's like you've identified where the glass of water is on the hot day in the desert. You crawl in the right direction. You lift it up. You lift it to your mouth. And then somehow you pour it all over your head instead of drinking it. So that's what I'm working on now. There's nothing wrong with my fucking charting. Execution. Impatience. It kills. It kills. It's not the end of the world. I mean, let's look at... What was it for me? Well, it was oil. I mean, where was I? Yeah, I was down here calling the lows in oil, and we had this move up in the week. Did I benefit from that? Did I fuck? Because I was hopping in and out. I thought, oh, am I wrong? Am I missing out? I was, not setting my stops wide enough, or getting in too quick, and I was getting out and going, oh, but what about motherfucking silver? Oh god, it's quick, it's maybe I should be in silver instead, and I'm hopping from asset to asset, and what about this, what about that, what about fucking this and this, that and the other. And I tried buying this support, this flag support here, and it's just dumped out, and it didn't work out. What else? Stocks. I mean, I've been saying that, we're looking at the end of the stocks rally. I identified... Where did we hit the 88.6? Yeah, it was here, which was also the 61.8. And then we just went a little bit higher. And then this was acting as... we took these highs here. It acted as resistance again. And we've been dumping since then. So I was just a little bit premature. And I could see this negative divergence, and we set up. I don't know. I've deleted it now, but it's actually at channel support. But on lower time frames, you would have had a channel like that. It fell out of it. Sort of wedging action type thing going on, and I saw all this, and I saw all this, and I saw all this with my eyes, and information went into my brain, and then I don't know what happened. That's the where things are going wrong. It's the brain stage. It's the brain that's causing the problem here. And then you can see where we topped out. We paused at the 88.6, and then we went to the 94.1. We all notice this horizontal level here. So I mean, Anyway, rant's over. So what's causing all this fuckery and all this excitement in the market? Well, if we look at the dollar, it's been going ballistic. It's been going mental. You saw down here at these lows, we have the divergence. So, you know, whether it was an MA cross, whether it was a channel breakout, trendline breakout, whatever you want, there was very good reason to anticipate that the dollar would be going up. Fuck knows why I was trying to buy silver for. I guess, you know, maybe I thought we'd take these wicks, or we've moved into now. We've moved into this whole supply gimmick here. So there's a high here, and then it's 109 something. 109.8 is like the next big level in the dollar. Slightly long-legged, but you got the nearly a reverse divergence as well. So buying, selling, well, it's not the best place to be buying because you're coming into this is some sort of that's a horizontal monthly pivot. You're coming into supply, and it could just slice right through, so not be bothered at all. We don't know, but you don't buy at supply. You don't buy at supply. You just don't do that. Quarterly, there's the reverse divergence. Or if you like the positive divergence, quarterly chart's a long time. And of course you would spot that at these lows, and they spend 1-2 quarters just getting raked up and down. Engulf, sort of nearly an engulf, and then it's this dragonfly, the tail went all the way back down, but then you had 1, 2, 3, 4, 5 reasonably straightforward quarters of upside. And there's the context of all this. I wonder if that means anything to anyone. Okay. Anyway, monthly. So dollar's looking strong. Dollar's looking very on the monthly. Yeah. Looks very strong. This is all done. This is all over. We'll get rid of that actually. So at least we're expecting 1.9, 110, possibly higher, whatever you like. Consolidation under support, eruption. So strong dollar must be your basis going forwards. Yeah, there it is. There it is on the weekly. Look at that. And then we reset here. Came into here. So yeah, a support, I guess that would be the high of that old wick. So yeah, assuming dollar strength, that's bad for metals, that's bad for indices. It's bad for the euro. Here's the very long-term chart of the euro. Here's the top of the range. Here's the bottom of the range. Here's the middle of the range, and we've dumped out under the middle of the range. So either this is going to provide some excitement here, or some relief for buyers, but we're already penetrating it, so maybe there's this much left. Maybe. But on the whole, you've got to say it looks so bad. Step 1 would be reclaim this. Step 2 would be reclaim this. Otherwise, it looks like we could come to the lows of the range. Although there's some previous demand there from the year 2000. Let's all meet up in the year 2000 when we're old. Let's delete everything on the monthly, because it's just a fucking mess. What am I doing? That's pointless. Does this go anywhere? Oh, it does. Look at that. Looky there. Looky there. That was a thing. Slightly disappointed I just said that. You can pop that in there as sort of a zone. Without making it too wide. So, dollar strong, euro weak. What's this? Let's delete everything on the weekly as well. Boop, there we go, that's better. And it looks so bad. It looks so bad. Yeah. So this bodes ill for metals and things like that. Let's go on the daily. 250 units is normally enough. So there it is on your divergence. You sort of right into this bottom, right into this pivot. That was the logical place to sell. To be selling stocks. Well, we started off looking at stocks, and this is where we are now. So I was browsing through one of my image folders for measures of market breadth and internals and ratios and things like that. Things I've not looked at for a few years. So I remember first learning about these things. There was this bloke or this trader called Doc Barter, who would I don't know if he's died or something, but he used to have his own blog. And it was our first time I found the idea that you can give yourself a bias in stocks by looking at things like how many over the 50, what percent of S&P stocks are over the 50 moving average, buying volume, selling volume, new highs, new lows, all that kind of thing. You can see we're at some support here. You can see the support here is this doji plus the 14 bands plus the VWAP. So we're in support area. We are in a support area. So let's take a look at some of these things then. So you're used to me looking at NIAD, cumulative NIAD, things like that. Huge momentum reading here on the MACD. Overextended. Like the NIAD came up to 136k. That sort of level with this here, which is this here, but we're a lot lower. I know some people think NIAD is a leading. It leads. I guess sometimes it does, but again, there's the reverse divergence sort of angle on all this. Rinia, well, we're used to looking at that. We made a double top with the last stop off with distribution for continuing down in this whole sort of area. We didn't breach or close over 18 when we did here. Again, bingo bango. It was another high in the markets, and it was also divergent on the histogram here. NEHL. You can do this as a cumulative thing with moving averages and things like that, and you can see we just popped over zero line just like we did here, just like we did here, just like we did here in previous highs, previous distributions, and we've gone back under. In fact, let's do it on cumulative, because I first saw it on cumulative, then I saw someone do it on just with the zero line. I thought I like that. So anyway, here we go. It's not looking good, is it? Yeah, oh, blimey. Let's throw some more time on there. Let's give it 3 years and 6 months, and let's throw on a 14. Yeah. Well, that's better. Well, on stochastics, they'd have got you in here. 7th, 8th of May, you've been buying. So that's April, May. So you didn't get the lows, but then, you know, you were encouraged to catch all of this, and you could have just been buying. We got this flattening out here. And then look at this, selling, 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 selling. So that's actually quite good. I'm not sure how useful it was here though. Or whether you got it on stochastics or on the crossover. Yeah, you'd have caught most of it. So it's not great for catching lows, it looks like, but as a trend indicator, that's very good. Here you've got chopped out a bit, I mean, yeah. Let's put it back on candlesticks. Anyway, NAHL, I've seen that. Who's the guy? I can't remember the name of the guy on Twitter who does like a million different like breadth charts and ratio charts and things like that. I cannot remember his name. David something? I used to follow him, but he was just like posting so many charts, it was just too much for my feed, and it was sort of paralysis of analysis. There was too much. Yeah, I mean, yeah. So one that I used to, oh, hang on, no, this is another one. So yeah, S&P Advanced Decline Index. I think you're meant to compare this to the S&P 600 Small Cap Index, or to a Small Cap Index, and look for divergences between the two. But I mean, right here, look, it's making a new low, but then we've got the double bottom that goes up. Like, is that meant to be reverse divergence? Or it's like it's just not doing a very good job. I don't know. Let's go with that one. Your small caps for your S&P 500. No, S&P 600. Ignore me. So no, let's go back above. And again, look at this, like you're getting new highs here. Price is not respecting it. Here at least you got the double bottom. Here they gave you a finger. And just not. And again here, look, it's going high, but price is going. Well, we'll see if we pick up from where we left off. I don't know whether to throw horizontal levels on here or what. That seems to be a bit of a level. That seems to be. I mean, it's the divergences that really you want. And again, there's like the reverse divergence. I don't know. Well, this is interesting. This is advancing issues divided by total active issues. And again, we're comparing it to the S&P, because that's the most comprehensive, most globally important stock index, or whatever you want to call it. And you're looking for divergences, I think, and sometimes it plays out like here. Then like these are a bit more confusing, and you would get chopped around. Got a bit of negative divergence here. We enter a bit of a downtrend. Nothing. 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 Sort of bottoming out, but price is going lower. Big positive divergence here. From there to there, from there to there. It peaks here and goes into rapid decline. Stocks don't know what to do, but then they follow, then they dump. So it was leading. So we've got divergences, we've got leading moves. These lows here. Low in indicator. Penultimate low in price. Higher high in indicator. Low low in price. We've got divergence. We pop up. We pop down. We pop up. We pop down. No real indication here. You might say that was leading, it's breaking down, but then look, it makes a double bottom. So these leading indications are, you don't know when it's leading and when it's not. Up and away. New high in price. Yeah, sort of a double top in the indicator. And this is not without its uses, I think. And this is just the S&P with high yield debt behind it. We don't need any volumes. HYG, high yield debt, often leading. I think the line is yeah, the candlesticks is the S&P and the line is high yield debt. You can see we were dropping off as this was consolidating, then the markets followed. You can see we were dropping off, then the markets followed. Here it actually made a higher high, but the market was coming down, it was unreliable. Here its low was in tune with the S&P, and it just kept on going down. It shat on this rally. Yes, small divergence, higher high, sort of. You can get clues. Let's move back to metals and stuff. Silver, fuck's sake, silver. A load of crap. This is the quarterly. Oh, it's rough. I mean, we could still be near the lows, or any potential lows, but it would need to gain this red line for me. It's a yearly line. It would need to regain, it failed, so over 2040. A bottom became a top with enormous wicks to screw up your entries and your stops. All the buy people who wanted to buy here presumably. So the audio cuts out just before the video gives up living. The audio cuts out first, and I think the reason for that is I've restarted my computer, but I was recording this quite late on in the day, and I had like 300 tabs open in Firefox because why not, and music and YouTube and plus Edge, plus the video recorder, plus Pro Real Time, and God bless it could do about 15, 16, 17 minutes, but then it went all screwy. So we were looking at silver. So here it is. It looks absolutely abominable. It makes sense in context of dollar strength. So the fact that we've returned basically to the origins of this move here, and we got a little bumperoo, but then no thank you very much. So, and again, anything under 2040 to 2050 is no good. It's definitely sell mode. I think it could stage a miraculous recoveries, revisits this demands area here, but is it? That's a realistic expectation. Well, maybe not. It looks like it could fall a good bit further. Hourly, yeah, it's. I mean, you've got to say it doesn't look good. If it looks that bad on the weekly, then we're looking to sell. Is all there is about it. But you would mark in. If we're going to have highs become lows, then what colour should you make it? Make it orange. This would be kind of the next area, I suppose, to go to. delete some of these old lines. Yeah, on the 15 minutes, I guess you could say. Well, it's a divergence, it's a divergence, but you know, if we break these highs, then sure, maybe. But it looks bad, doesn't it? It looks bad. I've not got a goal chart up, but one of the things I came back across was this. When I was looking through my old image folder, GDXJ ratio to GLD, so junior miners ratio of GLD, which is the gold shares, Spider Gold Shares ETF. So apparently, when the ratio is above an arbitrary thing like a moving average, that's supposed to be good for gold. They're supposed to buy gold, and I guess below you. But this is just relative between miners and gold. So miners are outperforming, underperforming, outperforming, underperforming, outperforming, underperforming gold. It's like when it turns down, it's meant to be bad for gold, basically. You saw that here, you saw that here. We're seeing that again here. It's turned down, it's under the 14. Rolling over on the histogram. Maybe like miners are supposed to lead, I think. Again, this is another... I can't remember who exactly this was. Bama? Was it Bama? Used this ratio. Well, this you'd think it looked really good, because look here, we're going up, we're making new highs, new highs, new highs, and then gold's not confirming. And then it's we go strongly to sell gold territory. We put in a reverse divergence here. Low becomes a high. Sort of. It comes to pivots anyway. So it's meant to be to help you buy and sell gold. The other one is oil. As I was saying, I got very excited. These lows here, you know, I thought, you know, oil is slowing down. It's losing its downwards momentum. It's come into a bit of sort of a pivot. Get rid of that now. You know, and let's get rid of that as well. Let's just clean things up a bit. Just clean them up. Clean them up. I think as long as we're holding above, well, this is a... I put it on here for some reason or other. Let's get rid of that as well. Keep it simple. Keep it simple, stupid. And you can see the divergences. But we're looking for price, for indicators, for you fucking name it, to take out those levels before we can confirm anything. We've come into this doji candle here. Oh, it's the Sunday night session. But we've come into sort of this pivot. It's a pivot anyway. We've tested it. We've stopped exactly in the mid of this range. We have the previous daily candle. We go hourly. You can see we're putting the divergences in this pivot. You can see highs, lows, highs, lows. This is where sellers came in on an up candle and we retested it. So on the hourly, it's looking like down until we get above this area here, this level here, 91.7. Oil is down, but we're coming back into, again, we're coming towards support, we're coming towards the origins of the move. So I would even say a break of here, because this is an up candle in the down move, so if we can break that, That would even be a good start on the hourly at 90.12. Yeah. What more is there to say? But apparently one of the things you can look at to determine the strength of oil or otherwise is dollar-CAD ratio with West Texas Intermediate Crude. US dollar CAD ratio with dollar WTIC. And apparently, the way this works, I don't know who, this could be another Bama scammer, innovation that I learned about and came across back in there, and I've not focused on it much since. You can see these are moving inversely to each other. Oil, dollar CAD against oil. So when dollar CAD is underperforming oil, you're buying oil. There's a triangle of complete fucking doom here. Then we're underperforming oil. Then we're outperforming oil. And the economy, the currency of an economy that's heavily into oil, outperforming the commodity itself. So we're selling oil. We're selling oil. So based on this, you can see that oil is still broadly in a sell mode and has been since way back here, back up at 115, whatever you like. So there was a reverse divergence, look. Oil made a higher low on a higher high, where the Canadian, the ratio was making a higher high. So that's one way. The other one is the stock of ExxonMobil ratio to price of oil. Again, I'm supposing the idea is that when oil is doing well, it will outperform the company, and when people are investing more in the company, it's stronger than the product. It's for dividends or whatever or something like that. This is magnificent analysis. I bet you're glad it's for free. Again, so when the ratio is crapping itself, it seems oil goes up. Is this the inverse? No. Here it's going down, but oil goes off like a rocket. So Exxon is underperforming oil, so buy oil. Here Exxon, no, this makes perfect sense. What am I on about? Exxon is underperforming oil, so oil goes fucking rampant, rampaging, like a rampaging herd of elephants, of rhinoceroses. French excellence. Consolidation. Stock of ExxonMobil is not making new lows as oil makes highs. It's getting higher and higher, but they can't pound ExxonMobil's stock price lower. And then we get the breakout, depending on where you measure it from. We get a momentum breakout here. There's divergences here. We start closing above the 14 here, and then it's sell low vision. You could have captured some goodies in there if you'd been selling from 104 down to 86.97. And the third way to know whether to buy or sell oil is its ratio against gas. Is gas outperforming oil? Or is oil outperforming gas? Now, of course, these two are intimately related because they're both fossil fuels. It's not something that's broader, like a stock or a national currency. So they could both be going down compared to the dollar, compared to other assets. But the ratio could be improving, and you could be thinking, so this is less useful. Because the ratio could look good, oil could be stronger than gas, but I mean that just might mean it's falling less, and they're both falling in that context. So again, gas is outperforming, oil is outperforming, gas is outperforming. So it's a similar type thing. When gas is outperforming, you're selling oil, it's rolling over. So this is gas underperforming. So see what I mean? So this would be, this whole area here is sort of buy oil, except it's not, 'cause oil's falling too. It's just falling less than gas. That's what's going on here. But then gas starts to outperform. Yeah. So I mean, these extreme readings. Sell oil, buy oil, sell oil, buy oil. So technically we've just come out of a buy oil signal if you're into RSI extremes. And again we've come into, oh, we've actually gone below. Yeah, there we are. The dropping off on the histogram. So it's potential. The potential is there, but it's very early days if it is, because it is that ambiguous look. It's got that ambiguous look. Dollar CAD, it's outperforming oil. ExxonMobil, outperforming oil. We're seeing some divergence, but that might mean something, might mean nothing. It's ambiguous. Similarly, gas outperforming oil, but by oil, divergences coming into lows. So if it is time to buy oil, it's very early days. Let's look at US crude again on the daily. Yeah, it's all about whether it can hold, in my opinion, above 88.85, whether we can blast through these highs, whether we can, you know, we're coming for it. We're coming for it, basically. Brent looks uglier. Brent I would not buy until it gets back over 95.92 on the daily. That's been taken, that's been done. That's the 4 hour. Same type thing. If we can get back above that, then, you know, hey, fair enough. Otherwise, there's plenty of lows down here that need to be took. And again, if we're going to see persistent dollar strength, yeah. So it's an ambiguous look, but tentatively, you could say, I'll have a crack at going long oil. Metals are just going to get fucked. I think if there's dollar strength, and you've got to say that it's not looking good for metals, because it's not. It's really not looking good for metals. I mean, you know, look at the scale of this reversal here from here to here. Anything else? Anything else? No, we've talked about high yield and using it to determine stocks and things like that. I'm tempted to change my RSI to white to match my price line, but it's on close, yeah. That's better. Tech's an interesting one. We're at channel support. We're at whatever this is here, this long-term diagonal line. Nearly, sort of, kinda. We've gone through the 14s. We cut right through those. Again, there's your divergence. I mean, for the love of, there's your wedge. You can see the wedge. You can see the wedge on the daily. Look, for fuck's sake, come on, draw. You can see it. Look, there it is. How I've managed to fuck this up, I don't know. Again, it's asset hopping. Hopping from one thing to another, thinking that, oh, this is a better opportunity than this. Oh my god, now look at this. Oh, this is a better opportunity than that. And every time you're getting eaten by the spread, and you don't give things time to play out. It's the patience factor. I mean, each candle on an hourly chart, God help me, it's an hour. If you're not prepared to wait a few hours and see what happens, then it's not going to work out, is it? And that fundamentally, I think, is my problem. I like it when they move quickly from where I've opened a position, and then you get that clarity, right or wrong, quick. But sometimes it's like that. Sometimes we might spend a few seconds or a minute up here before we came down, for example. But I mean, look, this is a whole day here. This triangle is a day. You can see it rolling over. You can see it breaking down. You can see us moving under the moving averages. Look, we even test. And it's the time factor and the impatience. It's just, that's what I've got to overcome, I think, in my trading. And then once I've done that, I'm sorry, but I've cracked it. I will have cracked it. Very frustrating being so close. But I know now what I must do. And stop getting so fucking big. Especially in something like stocks that trends for months and years, And maybe I'll make more use of I've rediscovered all my fancy schmancy ratio charts and things like that. This will help me step firmly from my bias. And what I need to do on lower time frames. Let's see if I can join these three separate videos together. They're probably going to run for an hour. Anyway, good night, everybody.